Now, looking at total return to unit holders, you've got A-linked units up 30% for the year, B-linked units up 24% at the year end of August, 176 properties. Tell us about the key, the properties within your portfolio that have performed the best during the period and really been the key drivers of that money there.
Thank you. Our retail portfolio has been the key driver of our performance. I mean, we had a reasonable performance from our office portfolio as well as our industrial portfolio, but retail is really where the key was. We're quite pleased about that because we've been assembling our portfolio in a defensive manner, and we believe that retail is where the defensive assets are at the moment. I think the key thing about our retail portfolio is the fact that we've been investing in very defensive retail assets with a high degree of national tenancy. Typically, the type of asset we buy has a degree of national tenancy of between 70 and 90%. So basically, that would take you through very difficult market conditions because these tenants tend to be very strong tenants from a credit perspective.
Looking at vacancy levels though, 10.4% at year end of August, and you talk about the fact that you really need to address that issue.
Sure.
What are you going to do to bring that down?
Yeah, look, there are very specific reasons why our vacancy has gone up, and it's really two specific properties. We had one office tenant vacating out of one of our properties. That particular property has been disposed post year end, so that vacancy should disappear. The other vacancy relates to a property that we've kept for strategic reasons, kept empty because we're busy with a revamp on it. It's a large industrial property. So if you look at our vacancies and you strip out those two properties, they have stayed more or less stable from year end. We've had a fairly high retention rate of more than 70% across the portfolio in terms of keeping our tenants in the properties. And in fact, there's been very good leasing activity across the portfolio. So if you strip out those two properties, our portfolio have held out quite nicely.
I mean, during the period also, you've also made major acquisitions, and your property assets grew by 1.4 billion rand over the period. So overall, you're sitting with assets of around 3.5 billion rand.
Sure.
Interesting that you're also getting exposure to the office space in Pretoria, government offices. Why moving into that specific area?
Again, we speak in defense. I think we are no fools in the market not to realize that potentially going forward that the economic situation will probably continue to be fairly tough. So what we look to buy is properties that are tenanted by blue chip tenants. It also speaks to the type of property we've been buying on the retail side. Now, if you look at our numbers in context, I mean, none of the numbers that we're reporting on today have been affected by acquisitions. And the acquisitions we've done are yielding significantly more than where we're funding at the moment. So if we just take that as a rule, it implies that we should be reporting even better numbers going forward. Yeah,
and before we get into that forecast, also one of the acquisitions you've talked about, the 169 million rand Tembisa Megamart. Yes. Tell us about retail activity in spaces like this where you talk about playing into defensive, low-income earner groups when it comes to retail.
Right. Our experience in townships and rural areas is that your urban areas as well as rural areas, or in fact South Africa, is densifying much quicker in your previously disadvantaged areas. So we find that as people move from the deep rural areas, they converge and they get into the more dense areas. And those areas have historically been under-serviced from a retail perspective. So therefore, we found a fair amount of growth there. In fact, a lot more growth than we find in your traditionally urban areas. And the driver has been government grants, obviously, to some degree. But there's a huge informal market that employs people there. So that market tends to be underestimated in terms of how well it can perform from a retail perspective.
So going forward, you've got 190 properties in your asset base. You've been listed for just over a year. Which of the ones of those properties do you think are going to be the flagship properties going forward? I mean, which ones are you focusing most on because of the growth potential?
No, sure. I think what we're doing, which is quite evident in the numbers and the stats that we've put out, is as a fund, we've made ourselves an objective to grow the average size of our portfolio. I mean, at the moment, the average size of our assets is around the 12 million mark. So post these acquisitions, we're moving to a point where our average size is going to be more than 20 million rand per asset. across the portfolio. Now, what that does, obviously, it improves the management intensity of these assets, but it's also, we've been driven by opportunity in the market. The opportunity in the market at the moment to actually get to these defensive, well-performing assets we found in the retail sector. But we've also bought selectively, as you saw, office buildings, well-located office buildings, well-tenanted office buildings with very good tenants in them. So we're going for the blue chip, defensive sort of tenant into our
You had a successful rights issue recently,
Absolutely.
and of course now you're saying you're looking to raise debt capital.
Sure.
That would mean that you have more acquisitions. So how much debt do you need to raise? And what's your next acquisition going to be?
All right. If you look at what our gearing did from this time last year, we were sitting at about 34%. Our gearing is at a comfortable 38% at the moment. As a board, we've taken the position that at 45 we're still comfortable, so there's still room there to fund further acquisitions with debt. We did indeed go to the capital markets to raise some 650 million. That particular money is already allocated to the acquisitions that we've announced, the 1.5 billion or so that we've announced during the course of the year. So that will fund that. The reason why we investigate in the debt capital markets is to further diversify.
And the acquisition that is on the cards right now?
Yeah. Acquisitions that's on the card.
Can you give us some insight into that?
Yes, no, sure. You're talking about Tembisa specifically?
Yeah, going forward, yeah.
Oh, going forward. Well, I mean, going forward, I mean, I can't really tell you what we're doing, but all I can tell you is that we've got a pipeline of more than 2 billion of acquisitions that we're busy assessing now. It's going to be a combination of turnkey, new developments, as well as existing stock. And basically, we'll roll that out over a reasonable period of time between now and, say, 24 months.
Well, thank you so much for coming.